Good morning, traders. This is Michael coming to you from Gamma Edge on Thursday, October 30th with our pre-market prep session. As always here at Gamma Edge, we'll cover our three pillars: sentiment, structure, and trend, as well as individual equities at the end. Go ahead and pop those in the chat either on X or YouTube, and we'll go over those via our web app tool so we can look at the options positioning structure for those individual equities. We have a lot to cover this morning, so let's go ahead and jump right into it really fast. Market trend model based on the tick index, quick orientation, the bolded white line. That's our cumulative tick or intraday instantaneous tick. This basically shows buying versus selling in the overall market. Yesterday, post FOMC meeting, leading into the FOMC meeting, we were actually seeing some selling heading into the rate decision. And then we saw significant selling into the afternoon. So we'll have to keep an eye on this. Obviously, we're below. This is the tick US. This is what we call our kitchen sink. This covers all the exchanges, but we're below the colored ribbon now. So that's not necessarily a bullish type look and below all the moving averages. So if you were thinking long, pre-FOMC decision or into the FOMC decision, we were already under our momentum moving averages. So this was indicating caution in the overall market that selling was controlling the overall market. And then we saw that pick up in the afternoon. So again, breadth indicator, new highs versus new lows. New highs were outpacing new lows, but not by a significant margin. And then our filtered cumulative tick indicator, plus 1,000, minus 1,000, larger block orders from institutions really started picking up in the afternoon. So institutions were selling into the afternoon, and then our cumulative tick finished well below the zero line. So again, we'll keep an eye on this. If you're bullish, we want to see this recover fairly quickly, start moving back to the upside, at least capturing the colored ribbon as well as the shorter term moving averages. All right, let's move on to the tick RC. This is how we base our mechanical portfolios. Again, as long as we're above the colored ribbon, the red is above the cyan. As long as the bolded white line is above those levels, we are entering positions in our mechanical portfolio. Again, we'll be cautionary for today for intraday as well as swings, as we're well below the moving averages, and then for the possibility to intersect with the colored ribbon. Now, historically, when we're in a longer term uptrend, we see these pullbacks within the market trend model into the colored ribbon, and then we'll see a bounce off the colored ribbon or just a slight pull under that area there. Good morning, Paul. Thanks for joining us. If you want to, I can send you a link to join if you'd want to join, or if you just want to do text, it's up to you, or answer questions. So anyway, we'll continue to watch this market trend model. Obviously, weakness into the afternoon and heading into the day. So this is not necessarily a bullish look. If you're a bull, you want to see this recover fairly rapidly, recover back above those shorter term moving averages and start moving from lower left to upper right. So we'll watch the interaction with the colored ribbon. As I said, the tick US is already showing significant weakness and below the colored ribbon. So basically just reduce risk and manage your position sizes appropriately. And we'll watch to see if the bulls or market participants step in with more buying versus selling in the overall market. All right, let's move on to the SPX. This is the options complex. It's the largest, most notional value. And that's why we look at the SPX. We separate the SPXA from the SPXP. The SPXA is our cruise ship or our tankers. These are larger market participants, institutions. Again, these are monthly expiries, so we like to look at those to understand where the overall large direction of the market is. This is kind of our 40,000 foot view. We maintain the call dominated gamma condition. You see the transition areas. Again, these are extremely important to stay above, to stay in a more favorable environment. Obviously, the net delta column is green above and below spot price, obviously indicated by our call dominated here. And then 7,000 to the upside still is that PGEX level. Really no change here with institutional or larger market participants positioning. Again, we'll watch those transition areas, though. If we start moving into those areas, then we would be slightly more cautionary. And also conversely, if we start seeing the out of the money, in the money calls starting to degrade and showing red, would that be out of the money put speculation, and a change with the out of the money call speculation to the upside, then we'd be a little bit more cautionary. So again, we'll continue to watch this, but call dominated above and below spot price, institutions really not changing positioning into the November expiry. All right, let's move on to the SPXP. Again, this is our shorter dated contracts. This is kind of what we call our speedboats. This basically controls price action on a 0DT as well as a weekly level. So again, all expiries turned on via our web app. We're call dominated, entrenched really via net delta, greens above and below spot price. You'll notice the transition areas. Again, these are extremely important. And then our GEX transition as well as our DEX transition here. Again, if we drop within these overall transition areas, it can be choppiness. Again, staying above gives bulls a little bit more favor to the upside. You'll notice that key strike, obviously 6,900. We've talked about that multiple days in a row. That's the peak X level as well as around Livermore level, just significant level there via the option structure and a psychological level. To the upside, we see COTMC is 69.35. That's slightly above our ZODT level, which we'll cover in a few minutes. And then you see 7,000 up there, significant speculation. And we still have a large amount of speculation to the upside. A few of our tools are showing some drop in the out of the money speculation, which we'll go over and we cover every day here. So we'll look at those here in just a few minutes. So a quick takeaway is call dominated bulls are in full control of the full expiry as we watch this day over day. All right, moving on to the SPXP GEX ratio. This is the first tool that's going to show a little bit of caution, not significant, but just something to keep an eye on. So this is a short dated call gamma versus short dated put gamma. Obviously, this is better than a put call ratio because we had a time component. We have significant blog post with education. I posted on X this morning about this, so make sure you check out that post. Quick takeaway is the red dotted line is the ratio of the call gamma versus put gamma. It continues to drop as price action continues sideways. So again, this is a divergence with price at the moment. Now, if we were to see SPX spot price up and we see the ratio start turning back to the upside, then obviously that would be indicating that we have the opportunity for price appreciation. The short dated call gamma, which is the out of the money call speculation, is coming into the overall complex and swamping the short dated put gamma. If we continue to see this drop as the SPX moves sideways, then this will resolve one of two ways. SPX price will start to drop with the overall ratio dropping, or we'll see the GEX ratio start turning back to the upside and resultant move most likely from the SPX to the upside. We're still above 1. So again, this is indicating, as with the web app, that call speculators are maintaining overall control. We discussed this previously about the SPX reaching those historical peaks where we would see monetization. And these levels are usually around the 2 to 2.3 level. Reviewing that chart, let me get the interactive chart. Sorry about that. Interactive chart here. It goes all the way back there. These peaks that we're seeing here in the 1.9 to 2 to 2.3 level, historically, this is when we see some profit taking start to come in. And I discussed that really the previous couple days. And then that hasn't necessarily come to complete fruition, full pullback, but we're watching this to see if the SPX will start to pull back a little bit. In pre-market, we are pulling back some. So it's just something to keep an eye on, feather in our cap. Heading into the day. So delta balance for today. Moving in, quick orientation here. The green is the out of the money call speculation. So again, this is another tool that will show the out of the money speculation dropping slightly. And then the red is the in the money calls below us, and that would indicate out of the money puts also. We do see that green line start to drop with a slight negative slope day over day. So again, out of the money call speculation starting to drop. Delta balance is the aggregate of both of these. So again, it's maintaining the +1 level. So again, as we discussed with the web app and the previous tool, the bulls are maintaining overall control. Call speculation is controlling the overall complex, but just a few cautionary flags coming in. Again, what most likely will happen or projection on out in time with this is our sine wave, or what we call the overall market cycles. We see these peaks of out of the money call speculation. Spot price runs up fairly significantly, and then we see some monetization or profit taking in those calls as they become in the money, and then we just continue that overall market cycle and sine wave until we see a significant amount of calls closing or leaving the overall complex via monetization or expiry. And then we see a large amount of out of the money put speculation to the downside. So as of now, we're not seeing that. That would look like basically the green line dropping below 0. The red line would start with a negative slope and drop below 0 also. So a projection on out in time, further expiries is being maintained with a +1 delta balance. So call speculators and bulls are maintaining overall control. But basically, these are just flags to keep an eye on to see if they morph into something more, or if this is just an overall market cycle that we discuss of profit taking, and then some put hedging and speculation to the downside, and then we just continue that overall market cycle. All right, let's head into the SPXP net stack command. This is our high sensitivity levels for today. We'll take them line by line. Net delta, we are in the money calls below us, in the money calls below us state, as well as out of the money calls. Again, this is bullish. Out of the money call state, or out of the money call speculation area is 69.25. Again, you see the right-hand plane integral significantly lower than the in the money calls. So these should be supportive on any pullback, even all the way down to 67.50. We'll take the charm level here. The right-hand plane integral slightly larger than the left-hand plane integral here. You'll see here. So out of the money calls, if we're below the 69.30 level, these will provide a slight headwind for price appreciation to the upside. And then as long as we're above 68.50, these out of the money puts as they decay will continue to be supportive. And then our gamma levels here, and then net Vanna, we see the out of the money call level, the right-hand plane integral slightly larger. So if we do see a drop in volatility with the overall confluence of out of the money calls going in via our intraday volume tools, then we could have a slight push or tailwind from Vanna as we move to the upside. So again, just keep these strikes on your overall chart and understanding how the interaction with those will affect price action. All right, let's move into the SPXP 0 DTE. So call dominated for today. Again, key takeaway as I posted this morning, transitions are a little bit wider. So again, this provides an opportunity for volatility within the overall congestion area or transition areas. As we've seen this morning, we've already tested down towards 68.70, 68.65. Again, this is overall drunken sailor range also. So key levels for today, obviously transition. If we're above the transition, we'd lean a little bit more bullish towards the upside, towards 69.25, as long as our vol M or intraday volume metrics are indicating speculation to the upside, as well as the market trend model continues to improve. So really three pillars there: sentiment, structure, and trend will have to be in confluence for price appreciation today. To the downside, 68.65 and then 68.60 matches the bottom of drunken sailor range, as well as transition. Again, if we move through those levels, we could be losing some deltas here. And then if we see the out of the money speculation to the downside, again, we could have a possibility of moving down. So we'll watch those key areas for bounce levels to the downside, as well as stalling levels to the upside. And then we do see, as I said, some puts within this overall transition area, and we're capture those puts if we're below those level, and if we're above those level, those will obviously be out of the money. So we'll watch these key gamma delta levels and transition levels for today as we head into the open. All right, looking at the trading view chart, I've overlaid the full expiry as well as our drunken sailor range and 0 DT transition. As you can see already, we're interacting with COTMP. Historically, this is an area where we see a bounce. This is where out of the money calls become in the money, and we usually see or anticipate some monetization or interaction with that area. And then we see we're below the 0 DT transition level, as well as the drunken sailor range. We're right at that level. So historically, this is where we would look for an overall bounce, move back into the transition level. Again, if we're in the transition level, as well as the drunken sailor range, we expect choppiness price action, as these are low exposure areas for the dealers. And sorry about that. Okay, sorry about that. So anyway, within the overall transition areas, we could see choppiness price action, as well as driven by the intraday volume metrics for the day. As always, join us at GameEdge.us. Free courses. Our Game Edge Fast Pass is our flagship options course. Make sure you take a look at that. It's all free. Sign up for it. It'll be delivered to your inbox, as well as our other courses. So make sure you take a look at those. All right, heading on to individual equities. Go ahead and pop those in the chat, and we'd be happy to take a look at those. We'll go ahead and take a look at, oh, you want to look at Meta? Okay, let's take a look at Meta. So thank you, everybody, for joining us again. Hang around for a few minutes. We'll cover the individual equities structure. Go ahead and pop those in the chat, and we'll look at those. Or if you want to cover any of the other content that I talked about, as well as any other tools, make sure you go ahead and post your questions in there. So Meta, all expiries turned on here. I noticed that POI is $5. Is that possible? Yes, it is possible. So basically that is just the algo POI. Yeah, the algo. So obviously, for some reason, there's a significant strike down there at $5 that's pulling the POI all the way down. So when that happens, basically what I like to do is I'll scroll back up. I'll look at the structure. We have these highlighted purple gradients. So I'll scroll down. I'll take a look at what the $5 total OI is. So it's roughly 93,000. The call OI is 40. The put OI is 53. So obviously that's the largest put OI. So I would go up here and I'd say, okay, 53,000 roughly is the put OI. So then I'd start looking through the put OI column. I'd look at the gradients and I'd see where the next couple largest strikes are, and I would keep those on my radar. But you also see that PGEX is actually 680. So I think that's probably an important level. We're well below that. And then you see COTMC at 667.50. Yeah, exactly. As like what Paul said, participants do this so they are not naked. Yeah. So it's obviously part of it is structure, most likely that they've put on. So what I like to do is I look at the other key levels. POI is important, but then PGEX is also important also, as well as the transition levels. And then you can look. The great thing about our web tool is you can look up and down the put OI column and or the net OI, obviously, and see who's our calls or puts controlling that strike, and then look at those individual strikes and understand that those are obviously still key levels, even though they may not be highlighted with a gradient. So to the downside, obviously, I'd be watching COTMC at 667.50. That could be an area where we see some monetization and a possible bounce area. But the key takeaway is Meta is completely put dominated all the way down, up and down the net delta. So very weak structure for Meta into Friday. Sorry about that. So into Friday, you see COTM 667.50 and PGEX is 680. So at the least, you would need to get back above 680 and transition area for any possible move to the upside. And we see PGEX moves up to 700, but COTMP, stays 67.50. So completely weakened structure. I would really not be looking for any bounce in Meta at the moment. So, all right, let's look at Apple. Yeah, no problem, Patrick. Let me know if that clarifies everything on that. So Apple call dominated, above and below spot price. We're above transition, barely above PGEX and COI 270. 280 to the upside is the next highest speculation area, staying above transitions key. So call dominated, everything looks good on Apple. 260, 260, we'll look for the next transition here, PGEX COI 270. So we'll click to the next expiry and see if the structure advances or to see if the structure declines. So transition drops, but PGEX and COI moves to the upside. So again, speculation still alive and well in Apple, all the way up to 285, obviously transition into November. So, all right, let's look at Amazon. Take a look at Amazon. Call dominated, above and below spot price. PGEX 230, COI all the way up to 250. You're above transition. Everything looks good there for the structure. We'll watch the transition area and we'll watch the PGEX COI to see if it advances or drops, expiry over expiry. So 230 to the upside for the end of this week, one more day. That would most likely be cap on price. Spot prices within transition, so it could be a little choppy. We see transition expand a little bit, and then 230 and 250 stay pretty well entrenched. And then we see PGEX and COI move. COI drops, but PGEX moves to 240. So speculation still alive and well in Amazon. So Amazon, everything looks good there. Tesla. Any change? Probably not. No, 500 still the key area to the upside. PGEX speculation all the way up. Transition area there. 470 PGEX COI 500. We'll look, but I looked this morning. I don't think there was any change. Now we do see transition expand into November, so obviously that's indicating some uncertainty in price. But we still see 500 PGEX COI, and you see significant gradients to the upside with call speculation. So really no change there. So Netflix. Yeah, let's look at Netflix. I haven't looked at Netflix for a little bit here. Put dominated. You're below transition. You're right at COTMP, so the possible bounce area. Let's see. PGEX and COI is all the way up at 1200 still. That's kind of interesting. Let's see. This expiry 1120 PGEX and 1150 still put dominated. So weak under transition. Transition expands. So significant uncertainty and congestion area 1150. So speculation is still staying to the upside, but we're in a weak put dominated structure and transitions fairly wide. So not necessarily significant price appreciation anticipated on the horizon until we change to call dominated, as well as expiries. Let's see when the last biggest expiry is. So 1031 is a significant end of the month expiry. So that could change, and where that money gets positioned on out in time could change the overall structure and speculation. So SPX, can you summarize the recap? Sure. 30-point move. 40-point move, especially the move 30 ticks. So key takeaway is we're within the drunken sailor range in transition to start the day. We are call dominated, edge to the bulls. Key takeaway on the tools are we're seeing some drop in upside speculation via the GEX ratio. That's short dated call speculation or short dated call gamma, slightly cautionary there. Delta balance dropping slightly out of the money call speculation. Market trend model was weak to end the day. So significant selling into the close, and then significant selling on the market trend model. So this is going to have to turn back to the upside. So some conflicting stuff. Structure is call dominated. Market trend model is weak, and we're seeing some upside out of the money call speculation start to drop. So we're really at a kind of an inflection point within the overall SPX. Key takeaway is if we drop below 68.60, most likely we'll see some more weakness down towards 68.50. And then below that, we have 68.30-ish, 40-ish area within the overall structure that we would be watching. So selling to end of the day may carry over into the morning, which we're already seeing pre-market. And then we're within transition levels. This is going to be extremely choppy. For a trade, you'd need to at least get a bullish trade. You need to get back above the transition levels. Bearish trade, if we continue to fail the bottom of drunken sailor range as well as 0DT transition, we could see some further weakness depending on what the market trend model does, as well as our intraday volumetrics. So Perry, hopefully that helps. That was a 2 to 3 minute recap. So yeah, thank you everybody for joining us. I love the interaction in the morning. Our community continues to expand. Perfect. Great summary. So I need to AI that and put it out on X, right? That's the 3 minute summary. End of day summary or pre-market summary. So yeah, again, continue to like and subscribe on X and YouTube. You'll be notified when we go live with our market content or post any market content. Yeah, no problem, Nick. Thanks for joining us. Again, share all of our stuff, repost, retweet. We love it as our community expands. We're a member-driven community. So, okay, love the recap. Okay, so that's basically what I need to do then, right? 2 to 3 minute recap at the end. We'll clip that and we'll throw that on X. So yeah, okay. I may not clip it today, but yeah, I think that'd be our quick recap. So okay, perfect. Yeah. Anyway, I love the interaction in the morning. Even if you're not a member at Game Edge, I love the interaction in the morning, going over our tools, and then hopefully you'll see the accuracy of the tools and the information it provides, and then you'll want to come join us at Game Edge and join our great community. So, all right. Yeah, exactly. So, all right. Thanks, everybody. Make it a great day. Manage risk appropriately today with a little bit of weakness we saw in the market trend model, as well as that out of the money speculation to the upside dropping. Just be cognizant that price appreciation may be difficult today, and you're within the overall transition area, so it can be very choppy. So thanks, everybody, for joining us. Make it a great day, and we'll see you later.